Welcome everyone, and thank you for tuning in. You're about to be treated to a very timely program that we are calling hashtag Black Taxpayers Matter, intersection of race, tax systems, laws, and enforcement. It is sponsored by the ABA section of Civil Rights and Social Justice as part of a series of panels commemorating Black History Month. My name is Richard Winchester, and I will be the moderator for today's program. I am an associate professor at Seton Hall University School of Law, where I teach classes on tax law and business law. We are joined by three other scholars who I will introduce immediately before their presentations. In the meantime, I want to encourage you to ask questions through the Q&A function on your screen. Please do not use the chat feature. If you do not see the controls, please make sure that your screen is not idle. We will address questions at the very end of the program. CPA Academy is collaborating with us to offer free CPE credit for this course. In order to receive credit, you must be viewing on the Zoom platform. Unfortunately, if you are viewing us on YouTube, you will not be eligible to receive credit. Those of you seeking CPE credit will have to participate in 6 separate polls that we will be conducting over the course of the program. Each poll will only be open for about a minute, so please stay attentive and provide a response to each poll question. This program is not offering CLE credit. The first poll will be launched right now. Please respond to the following question. We will be sharing a recording of this program with everyone who has registered. Feel free to share it widely with your networks. In addition, the section of Civil Rights and Social Justice is planning additional programs on a variety of issues. Visit americanbar.org/CRSJ for updates and to learn more. Without further ado, let's get started. Our first speaker is Stephen Dean. He is a professor of law at Brooklyn Law School and previously served as the faculty director of the graduate tax program at NYU School of Law. He co-authored a textbook entitled Federal Taxation of Corporations and Corporate Transactions. Stephen, I turn it over to you.
Thank you so much, Richard, and thank you, Francine, for organizing this panel, and to the ABA Civil Rights and Social Justice Committee for making this happen. I am going to share my screen, and I just want to say, in this age of technology, if you cannot hear me, I will switch to a different microphone, but I think it sounds okay so far, so we'll just go with this. I won't fix it if it's not broken. So let's see. Share my screen, go to the beginning, and start the presentation. Okay, great. Well, this is a real honor and a privilege, and I just want to say, in honor of Black History Month, I'm wearing my MLK T-shirt, just a way to acknowledge what's happening in the world, what we've done, and how far we've come, and of course, acknowledging today how far we have to go. The presentation I'm going to give, I'm calling Lessons Learned, ? Racism and Anti-Racism International Tax. I think that for most people, when they think about tax law, race is not one of the first things they think of, and that would be doubly true with international tax. So I hope you'll bear with me and just hear me out before you decide that race and racism is not something that is relevant for the study and the practice of international tax law. So I'm going to start with a little bit of a trip back in time. So I want you to remember, and maybe you're too young to remember how the world looked before this, before 2000, but just what tax havens meant, what the story of tax havens looked like before 2000. I'm from the Bahamas, so this is an example that I like to use. There was a NASA-based bank called Castle Bank and Trust. There was this fantastic episode that was documented in a congressional hearing where a banker's briefcase was searched and photographed while by an IRS agent while somebody took him out to dinner. Just really, really incredible stuff. And the bank, it turns out, was one of the CIA's finance channels for operations in Cuba. This is really just trying to underscore how long ago this was in terms of the narrative. This was the narrative of tax havens and offshore tax havens before 2000. Perhaps you could think of it as analogous to insider trading, right? It was something that we didn't like, but did not have the urgency that the discussions about tax havens have now. It was considered, a crime that was bad, but didn't have the sort of the resonance that it does now. So what changed? What changed was in 2000, and this was at a time when we were really concerned about the survival of the welfare state. Really, could we collect taxes? And a lot of this came back to the OECD, which had for a long time, the Organization for Economic Cooperation and Development, for a long time had been sort of the source of international tax law. So when things looked a little bit sketchy, a lot of eyes turned to the OECD and they came up with an answer, right? So they wondered what was wrong and they decided it was these countries, right? So they came up with this Blacklist in 2000 and really reframed the conversation about tax havens and offshore tax evasion. And so whereas before 2000, tax havens were places where bad things happened. After 2000, tax havens became the enemy, right? They became the folks who were doing bad things. So rather than focusing on banks like the Castle Bank and Trust that was facilitating tax evasion, they turned to this new approach that was not about sort of cooperative information exchange with tax havens as they might have done once upon a time. This was not just naming and shaming, but naming and threatening sanctions, right? So there were threatening economic sanctions against these jurisdictions if they did not cooperate in the effort to crack down on offshore tax evasion. So this was, I just want to underscore the shift that took place here and how big a change it was. It's always impossible to remember the world. I mean, can you remember the world before everybody knew Zoom? It's impossible. And I think that the shift on tax havens is really perhaps not quite as dramatic, but it certainly is significant and really impossible to remember what the view of tax havens was before the 2000 list. So that's just as background to the story that I'm going to tell and the lessons that we've learned or maybe haven't learned. So this blacklist was published. We were well down the road to sanctions on these jurisdictions, and then something happened, right? Something happened that brought that movement to a halt, and that's really been widely misunderstood. And I just want to help folks understand what actually happened. All right, so there are two countries or two jurisdictions on this list that are especially important understanding why the 2000 effort to crack down on tax havens did not, and I just realized my slide says 2020, which is incorrect. It is 2000. It was 2020 recently, but not when this blacklist was published. Apologies for that. So on this 2000 blacklist, these were the jurisdictions that are relevant for our story. Right. So these are the two, and there's one omission. right? So there's one omission that in 2000 perhaps wasn't quite as striking, but certainly is today, right? So even a few years later, when we had the UBS scandal that made it clear that if we're thinking about offshore tax evasion, tax havens, Switzerland deserves to be on any list, and certainly was true in 2000, but it wasn't. So you had, Liberia and the U.S. Virgin Islands, but not Switzerland. So why does that matter? The big shift for the U.S., right? So the U.S. withdrew support from this initiative, which really had a dramatic effect. And the story of how that happened has been really misunderstood and mischaracterized. So in 2001, Treasury Secretary Paul O'Neill published an op-ed where he just sort of came out and announced that he was going to withdraw support from the OECD's approach. And that was really the end of it. And a lot of folks assumed that there were reasons why this happened, but it wasn't quite so clear. And you have to think back to that list that I showed you, especially the two jurisdictions that I highlighted, Liberia and the US Virgin Islands. So O'Neill wrote that he just basically decided that this was not an appropriate way to go. And the reason he did that was that he got a letter from a majority, not all, of the Congressional Black Caucus. And you may wonder, as many people did at the time and since, why the Congressional Black Caucus would be in favor of tax havens, right? So why would the Congressional Black Caucus take this position? And there were a lot of statements suggesting that the Congressional Black Caucus might just have been fooled or persuaded into doing this, but there actually was a very good reason. So before the March 14th letter, there was a letter a few days before that from this woman. So this woman is a non-voting congressional delegate from the US Virgin Islands. And so she could not vote, but she was in fact a member of the Congressional Black Caucus. So she first wrote a letter to O'Neill, and which did apparently not enough. And she got reinforcements from the members of the Congressional Black Caucus. And the most important voice of support she got from the Congressional Black Caucus, and in that second letter, is somebody that I don't know if everybody will recognize from this first picture. I don't know if maybe we should have a poll for this, but maybe not. Maybe this is going to help. If you don't know him from this picture, I can't help you. Right. So this is Representative Charles Rangel, one of the Gang of Four from Harlem, who was in Congress for about 1,000 years and eventually ended up as the chair of the House Ways and Means. And as the Blacklist was being published, he had just finished advocating for an African free trade agreement. And I was not in the room when all this happened. I was just out of law school, but I like to think that he looked at that list, which was about to threaten sanctions on Liberia, which of course was in the middle of just a terrifically brutal civil war. I think it maybe was on a break between civil wars when the Blacklist was published. But my sense is that when this happened, he looked at this list and decided that. So today we have great examples of what racism looks like. So racism, we know, is not just folks in pointy hoods. That definitely is, but that is not the only form, and certainly today, thankfully, not the most prevalent form of racism. But you have to understand, when you look at what racism looks like today, certainly we have, I like to think of the recent story about Port New Richey in Florida. So last summer during the Black Lives Matter movement, there was a series of confrontations between Black Lives Matter protesters and members of the Proud Boys. And in a Washington Post story quite recently, maybe a few days ago, they noted that only the Black Lives Matter protesters were cited under ordinances for noise control. So when Charles Rangel and the other members, but not all, members of the Black Caucus decided to support this effort, and you can just imagine O'Neill finding himself apparently to the left of most of the Congressional Black Caucus. That must have been quite confusing for him. And they withdrew support from the Blacklist, really because there's no way to look at the list and the absence of Switzerland from this list and not worry that there's some sort of racial bias in that list. And in the story that was sort of newly told in 2000, that tax havens were not places where bad things happened, but the tax havens were doing something bad. Right, tax havens were committing some sort of offense that would justify not just naming and shaming. And again, that was not what the OECD proposed. The OECD proposed sanctions that would have devastated the U.S. Virgin Islands and Liberia. And Charles Rangel and Delegate Christensen were ready to speak out about that and about the perceived unfairness of that, even though advocating for tax havens probably was not something they expected ever to do. So there was an important lesson to be learned in this episode, and it generally was not. So soon after this episode, sort of the narrative begins to take shape. So it was that the Congressional Black Caucus sent their letter after laborious persuasion from right-wing groups. That doesn't actually quite look like what happened. To me, it looks like Delegate Christensen realized that her jurisdiction was about to be targeted by the OECD for sanctions and decided that was not great. She spoke to other members of the Congressional Black Caucus who decided that it would not also be great if Liberia were targeted for sanctions at a time when it was so vulnerable for something that clearly it did not deserve. But this is the story that the right-wing groups had used the Congressional Black Caucus as sort of a cat's paw or a dupe. But this became the narrative, right? This became the narrative. And now when you see Sharman's book, Havens in a Storm, which I think is considered to be the definitive history of this episode, they describe the Congressional Black Caucus as being open to persuasion as to where their interests lay in this issue. So you're seeing now that the narrative does not reflect the lesson that Charles Rangel tried to teach us. And here we see, this to me is not an indication of any racial bias. I know some of these folks, and I know that they do not have any bias that's being exhibited here, but this is just the narrative that took shape. The narrative was that the election of George Bush, so the role of the Congressional Black Caucus has really been erased, and the role of Charles Rangel has really been erased from this story, and it became about the election of George Bush. And you'll notice that in this article written by Australians, which is a fine thing, there's been an assumption or a mistake that the reason that the change happened in 2001 was that George Bush was elected in 2001, right? So this is trying to explain why the change happened in 2001, supporting the OECD initiative to not supporting it. This is now just a mistake that has really been ingrained, and there's no sense that there was a lesson that we could learn, that there was, whether unconscious or conscious, there was a spokesman for the OECD quoted in the New York Times at the time the blacklist was issued that talked about these tax havens behaving like gangsters. The word gangsters was what that spokesman used in that New York Times article. So there's some sort of implicit, at least, bias happening in the construction of that list, which brought the CBC to bear on the question. But that whole story was really just lost. So that was one lesson that we did not learn, but there was an opportunity for another lesson a few years later. So when you think about FATCA, and for those of you who are not international folks, I'll just explain briefly what FATCA is. It is an effort by the US to crack down on offshore tax evasion, right? So this is an effort by the US, and this was passed about a decade after this first incident with the OECD Blacklist. And I had this formula, which is a little bit whimsical, but I'll tell you what I mean. So what FATCA did was it threatened banks all over the world with harsh penalties, and the harsh penalty was supposed to take the form of a 30% haircut on all payments to the bank out of the US. So not related to any specific account or any specific action by the banks, but if they did not provide the information on US account holders that FATCA demanded, they would really be put out of business, right? You could not stand to receive only 70 cents on the dollar of every payment that passed through the US. So this was really quite persuasive. Rather than waiting for other countries to cooperate or tax evaders to see the light, what you got was FATCA. And what is FATCA? I like to think of FATCA as a combination of the Bloody Wrangle Amendment, plus Obama's campaign promise to crack down on international tax abuses, plus the Swiss banking scandal, UBS, and the others, without information exchange. So what had happened before FATCA was that we relied on information exchange with other jurisdictions. So this dates back to the first part of the 20th century. And what would happen is that one jurisdiction would collect information from taxpayers in order to exempt them from withholding, and would collect those names and send that over to the counterpart jurisdiction. So if payments were going to Switzerland and we had an information exchange agreement with Switzerland, I'm not sure we did, we would agree, we would not withhold on those payments in Switzerland because we would essentially know that they were going to Switzerland. We would tell Switzerland that these guys were going to receive payments and they should pay tax on it. This did not work very well for all sorts of reasons. This is a quote from the Commissioner of the Internal Revenue at Everson, and he explained why information exchange did not work. My favorite part is that all the amounts were in foreign currency. That is my favorite part. So this was not very helpful. FATCA is much more helpful in that these banks are just providing information about US taxpayers, and that's the end of the story. And why do I say this is part of the Bloody Wrangle Amendment? And just a little bit of background about Charles Wrangle. So as I say, he was a member of the Gang of Four. He was a long-time member of Congress. And one of the things that he did, and one of the lessons he's taught us that's relevant for Black History Month, he was one of the folks who created the effort to deny foreign tax credits to businesses operating in South Africa during the apartheid era. And in Charles Wrangle's memoir, he tells a story of talking to Nelson Mandela, who told him that at the time that rule was referred to in South Africa, not with kindness, as the Bloody Wrangle Amendment. And it was criticized because, of course, tax should have nothing to do with social justice. And this was the theory. And so this was a terrible thing that Wrangle had done in their view, but in fact, a wonderful thing, we would say today, by helping force South Africa to confront what it's doing by applying the force of the same force that FATCA brought to bear, right? So this is the power the US has. It can be quite a bully. It can use that for good purposes sometimes, as it did here. So this is what FATCA did, right? FATCA showed that, and just incredibly, my favorite thing about FATCA is that it never used the term tax haven, right? So to me, what it did was recapture the old narrative understanding that tax havens may be places where bad things happen, but they're not doing bad things to us. Right? That is a sort of a quirky way to look at what the tax haven problem is, and FATCA rejected that, and I think has been correctly perceived as a flawed but effective way of cracking down on offshore tax evasion. So FATCA attempted to teach us a different version of the lesson, similar but a little bit different. And what it tried to teach us was, again, the idea that tax havens are enemies, or that need to be named and shamed, or subject to sanctions, is really, whether you can describe it as political opportunism, whether it's cynical, whether it's just a reflection of unconscious bias, I don't know. But now we had two lessons, two opportunities to learn the lesson, and let's see if we've learned the lesson this time. So the other thing that I want to emphasize about FATCA, and one of the reasons that I think it is helpful to think about FATCA and why it was successful, and I know you're not going to be able to read all that, maybe you can, but you don't have to. Just read the underscored part. I like to think of FATCA as just proof positive that diversity works, right? So we think of tax, we all love tax. We're all here because we love tax. We love tax in part because it is hard, right? And tax lawyers are smart, and we're all proud of that. Everybody who's involved in tax views themselves as masters of this really arcane area. And, I think sometimes that makes sort of tax seem like a place where diversity is less important. We just need the smartest guys. We don't care what they look like. But in fact, because it is hard, we need more diversity. And perhaps this is my own little spit on this, but I like to think that FATCA has got to be one of the few times you actually had a really diverse cast of characters in Congress sitting down and deciding how to fix this problem that nobody else had been able to solve. And FATCA did it, and I like to think that diversity had something to do with that. So were the lessons learned the second time? No. So this is 2020, right? So this is why I got that wrong number before. So we have a new blacklist, right? So now it's the EU that's doing it. So it's not the OECD. The OECD certainly has never publicly repudiated its efforts to create a blacklist. I think they view their effort as a noble one that was undercut by anti-tax forces. I don't think they've ever quite acknowledged the mistakes that were made in drafting the blacklist and threatening those jurisdictions with sanctions. So, if you look at this list, there are some similar jurisdictions on the 2000 and the 2020 list. Some are different. But again, this is not, I think if you think these jurisdictions have destroyed your global tax system, you have a terrible global tax system. I think that is, there's a lesson here as well in that. If these are jurisdictions that you think are destroying your tax house of cards, it may be a house of cards. So we have never quite learned the lesson that you shouldn't rely on blacklists that prominently feature Black and brown jurisdictions as part of your effort to save the welfare state, which is really what this is all about. And I think my time is winding down. I just want to make one final point. So the final point that I would like to make is that I understand that it may seem odd to speak about race in the context of international tax and racism specifically. And I hope that you are open to the idea that FATCA could be an imperfect but anti-racist solution to this problem. I believe that it is, and I hope you'll be open to that. And what I want to emphasize is that the problem with the change that came in 2000, the shift in the narrative from tax havens being a place where bad things happen to tax havens being our enemy in some sense, I think is powerful, not because it features anybody in pointed hoods or anybody yelling. That's not what's happening here. But that narrative has become so entrenched and so pervasive that, when you get the article by Dominic Dharmapala and his co-author about which countries become tax havens, and you look at the information they gather and the questions they raise, and they point out that tax havens are all well-governed jurisdictions, mostly former British colonies. The problem with this narrative, and the reason it is so, I think, pernicious, is just how widespread it is. So this is from, this is a sort of an image from The Guardian. I'm occasionally confronted with these on Twitter, and every time I respond heatedly, because if you look at the headline, right, the headline is that they're going to add the Channel Islands and some other islands to the OECD, to the EU blacklist. This is what happened after the UK left the EU, so now they could target these jurisdictions without facing sanctions from another EU member. They're facing repercussions from another EU member. But this is just taken for granted, right? It's just taken for granted that you would never caption a story about terrorism with a mosque. You just wouldn't do that, right? That's not something you would do, and certainly not something The Guardian would do. You would not caption a story about crime with an image of a random Black person. You just would not do that. So it is, to me, a sign of how entrenched this story has become, how the anti-racist lessons we learned in 2001 from the intervention by the Congressional Black Caucus and when FATCA was enacted, this powerful, flawed, but anti-racist solution to this problem that people view as quite successful, but definitely anti-racist, has not been learned. And we think it's okay to use an image like this. And it's a lovely beach. I grew up on beaches, so I can say without question, this is a really nice one. But this is just their stock photo for tax havens. If you look, you'll see that this is what they use for all their tax haven stories. And this is just unquestioningly used. This is what tax havens represent to people. And you'll see stories. My other favorites, the first time I saw The Guardian use this was a story from earlier in the pandemic. And it was, should tax havens pay for the cost of the pandemic? And this image was there. And I thought to myself, wow, these are just sort of stock villains that they can use for anything that is happening. So I hope that those of you who are out there, will have learned something helpful about just the conflict between these conscious and unconscious biases we have that make us look at a list of jurisdictions and decide that Liberia must be up to no good because it has no income tax. And it's not that they were in the middle of a civil war and were in no danger of becoming a major tax haven. But we come up with this list of jurisdictions and Liberia is on it. And that has consequences, right? It has consequences because a different sort of approach to the tax haven problem in 2000 and 2001 might not have caused this lost decade that we had between the OECD Blacklist and FATCA, and that's a shame. So in the chat, after I'm done, I'm going to post a few things, a really old op-ed that I wrote about this problem in 2006, and then a relatively new article I published in Tax Notes last year, just so we'll have more information about these topics. So thank you again for listening. I really appreciate your time and your attention.
Okay, we're going to break for our first poll question, so please take the time to respond. You should now be viewing the third poll question. Please take a moment to respond. Okay, let's resume. Our next speaker is Donnie Charleston. He is the Director of Public Policy and Advocacy at E Pluribus Unum. He previously served as the Director of State and Local Fiscal Engagement for the Urban Institute. He has extensive experience in state and local government, including particular expertise in taxation and finance and economic development. Welcome, Donnie.
Thank you for the introduction. I apologize for being a bit late. I got tied up in another presentation that I had to cut myself away from. It was a little difficult because I was being asked some questions from a governor's office in the Midwestern state. So yeah, and I'm going to switch and share my screen. Hopefully I picked the right screen. So is everyone seeing a slide that says E Pluribus Unum? Okay, good deal. All right, so really quickly, my name is Donnie Charleston. As you mentioned, I'm with E Pluribus Unum. We're a relatively new organization. We were the brainchild of Mitch Landrieu, who's the former lieutenant governor from the state of Louisiana and former mayor of the city of New Orleans. He created this organization to focus on issues of racial equity and economic mobility, particularly in the American South. With part of our focus being on this idea that you have to really address issues of racial reconciliation in America, so that you can then do the hard work of figuring out how to create a society that includes everyone and has opportunity for us all. And so with that, I'm going to jump right into my presentation. Well, quickly, previous to that, as you mentioned, I was with the Urban Institute, the Tax Policy Center there, where I focus on taxation, economic development, and a range of other issues, including racial equity. And so I'm going to bring all of that into this presentation for you today, which is kind of going to be an overview of the tax system and the racial implications of our tax code.
Donnie, I'm going to interrupt you just to let you know we're not seeing the, you need to share the slides in the slideshow. We're seeing, all the wrong view. So if you can go up to the top.
Use slideshow.
Yeah, use slideshow. Yep, there you go. Perfect.
Okay. All right.
Excellent. Thank you.
Okay, so yeah, those are the big takeaways right there on that slide. So you see what we're trying to accomplish here today, provide you guys with a framework for really understanding the tax code and how to provide some thoughts around how you can analyze, many of the things that we take for granted with our tax code and really apply a lens to it that helps you understand issues of equity with respect to our tax code, not just at the federal level, but at the state and local level as well. This particular slide is really a snapshot that is designed to really show you how much money we're talking about here. We're talking about, just for the year 2018, we're talking about, $5.4 trillion in tax receipts. And that's that's federal, state, and local. But a key part of this is that the federal receipts are 64 cents of every tax dollar. But when you look at the state and local level, we're talking about 36 cents of every tax dollar is state and local money. And so it really brings home this idea that we really can't talk about taxes if we're not talking about the entire picture, if we're not talking about the reality that it's state and local, the reality that all of this, not just tax dollars, but policies are inextricably linked together. So we have to really, create an entire picture when we're talking about these questions of equity, and not just place the entire responsibility on the federal government to solve these problems. There's a tremendous amount of responsibility at the state and local level as well. This slide is really, not just for comic relief, but to really tee up a question around the tax code. And that is the tax code really, still sit against Black taxpayers? Isn't the tax code just neutral? This is a critically important question that we have to answer, and we'll try to wrestle with here today. That I think, particularly when it comes to economists and people who work with taxes, they like to think of the tax code as something that's very neutral, that doesn't have racial implications. but it does. And the second part of this is trying to tease apart this idea of, is it class-based or is it race-based? What we know is that in America, race and class are inextricably linked together. You know, you can't really tease the two apart. You know, of course, low income is not synonymous with race, with people of color, but the two things are inextricably linked together. But we'll definitely try to tease some of that out here today as we move forward. And so part of the challenge of teasing apart this question around race and class is partly because we don't have good data. There is nowhere on the tax code that allows us to tick a box that says you're Latino, you're Hispanic, you're African American, you're Asian Pacific Islander, whatever have you. But we know, you know, but for every social safety net program, every social net program rather, who the races, who people are with respect to their race from the standpoint of, you know, their accessing of those benefits. We know from a standpoint how people are stratified in occupations by race. We know how people are stratified by political parties by race. We know how people are broken down by census tract, at the census tract level of the neighborhood by race, but we don't know who's paying taxes by race, which is, it doesn't make absolutely any sense from the standpoint of this is the most important thing we do as citizens, but we don't have any insider data with respect to race and the tax code. So that's a glaring issue that we definitely need to correct if we're going to really understand and wrestle with the tax code and inequities in that system. And so when we look beneath, and the 1040 is kind of a great example of trying to assess this question around taxes and race and class. And one of the major elements that we first look into is really looking at how the tax code, even though it doesn't carve people out by race or let's identify people by race, it does kind of group people by other categories. And that's your filing status, for example, whether or not you're an individual versus a single member LLC, whether or not the individual is retired or not. And so all these different distinctions and groupings that the tax codes makes that we can pull data from, but we don't have data on race. But even with those carve outs that the tax system makes, there are racial implications. For example, the marriage question, are you married or are you not married? In 2019, just over half of white households were married. So over 50% of white households were married in 2018, but only 27% of Black households were married in 2019. And African Americans had the highest percentage of single heads of household in the country. That has severe implications from the standpoint of how you or what you can claim on your taxes or not. And another example is retired workers. When we look at non-government employees, workers of color are disproportionately represented among those without access to workforce retirement plans. In 2016, 60% of white families had retirement accounts, but only 34% of African-American households had retirement accounts. We know there are tremendous tax benefits built in the tax code for those families and individuals that have retirement accounts. And so, and the list goes on and on and on. As you go down the tax code, the 1040, you can carve out each one of these different provisions of the tax code, and there are racial implications. And then we tabulate all that up, we can come to a basic conclusion that there are arguably, even if it's not by design, de facto discrimination built into the tax code by virtue of the racially differential impacts that provisions of the code have on different racial groups in America. More importantly, there is a historical legacy to those policies. So those policies were not crafted out of thin air. And there's a history there that we're going to explore some of that, a history that's broken down by race and class and intertwined with the tax code. But like I said, well, that's not enough to kind of tease apart this question around race and class. That kind of gives us a lens that there are elements of the tax code that are broken down by race, but it doesn't really answer the question for us. So now we're going to turn to looking at, backing it up a little bit and looking at this broader picture around income and around class in America. And this slide kind of captures the idea that the middle class is shrinking in America. And this has happened for quite some time. And really it's what we call a bifurcating of the economy, where we're seeing tremendous growth from the standpoint of people moving from the middle class to the upper income distribution or skipping the middle class altogether. And a tremendous growth in number of people at the bottom of the income distribution. So this is due to our economy shifting to a knowledge-based economy that rewards education, that rewards certain skills, shifting to that from an economy based on manual labor. And this corresponding glut of people who are being pushed down into the service economy, which is disproportionately a low-wage service sector economy that is disproportionately made of people of color. And it goes without saying that those occupations and income and wealth definitions that has tremendous tax implications for it as well. And to that point, when we look at the wealthy, we look at this bifurcation, this growth, this tremendous growth of people who are at the higher income distribution. A key aspect of that bifurcation is the tremendous growth, not only in those individuals in that income group, but how their money is earned. And they're earning, to a greater degree, their money through capital assets and not through regular wage income. And you see there how the breakdown by race from standpoint of families who own capital assets. You see there are tremendous disparities between white, Hispanic, Black, and other categories. The other category being made primarily up of Asians and other groupings. But you see the tremendous racial disparities in those capital asset distribution across race and ethnicity. Now, when it comes to, now we're going to flip and talk about the tax code as it relates to those capital gains. If any of you are tax lawyers, you know there are tremendous benefits to capital gains income as compared to wage income. We know that it's taxed differently. We know that you can pass it down from generation to generation. We know there are tremendous loopholes that allow for people to underreport that income, every year with respect to their taxes. So this is just a brief summary, just designed to capture just a little bit of the preferential treatment that applies to capital gains as compared to wage income that allows for example, just for massive and tremendous accrual of wealth and the transfer of that wealth across a generation. Now, the reality is that this is not how our system was designed to be. When we look back in time, and people are fond of quoting the founding fathers and what their mission or vision was for the country, and it's worth noting that Thomas Jefferson was opposed to the idea of perpetual wealth. And he was quoted as saying, has been quoted as saying that the power to dispose of estates forever is manifestly absurd. So this idea that we could pass wealth down from generation to generation, father to son to grandson and so forth, is something that was, it was an antithesis of what was intended for our nation, because they had a very keen sense of how that type of accrual of wealth could corrupt our system of democracy. So this next slide, we look at property assets in America. And the whole idea of these slides is kind of look at different aspects of the tax code beyond the groupings, but look at how it treats income in particular and property and how that breaks down by race. So we just looked at capital assets. This slide looks at property assets. And you see there again that there are tremendous differences with respect to, or disparities with respect to, real property holdings between white, Hispanic, Black, and other populations. Once again, same disparity exists. Tremendous real property holdings in white families as compared to families of color. And once again, when we look at the tax code and just look at one provision of the tax code, and that's the mortgage interest deduction by race, we see that the benefits accrue primarily to white households from standpoint of that particular deduction and the monies and wealth they're able to generate by virtue of that deduction. Lastly, we look at income and how the tax code treats income with respect to race in America. Once again, the slide shows you, the breakdown with respect to who holds what amounts of the share of income in America. And we see the white families in terms of comprise 66% of all households, but comprise 76% of all households with income over $150,000 a year. And you see, once again, the huge disparities from the standpoint of the number of households that with income over $150,000 a year in people of color here in America. And once again, when we look at how the tax code treats income and taxation, those individuals who have higher income, whether that's wealth income, whether that's income, wage income, those individuals are contributing to the greatest amount of underreported tax liability in the country. And so when we're talking about who's not paying their fair share, it's very clear that the issue is really a question of class, and it's particularly pernicious from the standpoint of individuals who are at the top tiers of the income system distribution. Those are individuals who the IRS does not go after. Disproportionately, the IRS goes after low-income taxpayers, African-American taxpayers in states like Alabama, in states like Georgia, in states like Tennessee, focusing on claims around the earned income tax credit and not going after underreported income from farms, underreported income from rents and royalties, which are three of the biggest categories of income underreporting in the country. So this next slide is designed to kind of put forth an idea, the idea that taxpayers is a political identity. And it's a political identity that has been used throughout time, throughout American history, to exclude Black Americans. It's been used to create this othering in America and to demarcate ours versus theirs, to demarcate, who's in and who should be, quote unquote, defined as legitimate taxpayers and who should not. And it's something that's really baked into the not just our tax code, but baked into the cultural DNA of America, if you will. And the code, that the idea of taxpayers is something that's really has been weaponized throughout history to carve out, this idea of who's worthy and who is not worthy. And it even goes back even farther than that. And I'll talk a little bit more about this how this taxpayer idea has been weaponized, but it even goes back to prior to that, when we go back to the 3/5 compromise. Many of you are aware of the 3/5 compromise in the Constitution that counted every person held in bondage in slavery as 3/5 of a person for the purposes of congressional representation and direct taxation. Before that compromise, taxes were primarily levied on land ownership, but landowners, going back to the issue of tax evasion, consistently avoided tax compliance. And so what that 3/5 compromise essentially did was it created this boom, this boom for wealthy landowners in the South who gained more seats in Congress, but still didn't have to pay the full amount that they should have been paying in taxation. So even from the beginning of this nation's founding, we see that Black people were used as tools of power generation vis-a-vis the tax code early on in our founding. And so we see the same ethos, played out across time, and the exclusion and differential treatment echoes through not just through the Reconstruction time period, but on through time, where we see an increase in special tax districts during Reconstruction as white Americans sought to safeguard their tax dollars. And of course, we see a deepening of that dynamic in the wake of the Brown versus Board of Education decision with the creation of city versus county tax districts, small town school systems, and a push for the use of public dollars to fund private and secondary school expenses to the exclusion to the exclusion of school districts and schools that were there for African Americans in the time period. And even when you look at the Brown decision, and you look at some of the actual letters that were sent to the Supreme Court during that time period, you see that white taxpayers were using that and claiming that identity as taxpayers as justification for supporting segregation and opposing integration in America in that time period. So it's very much a weaponizing of that term of taxpayers and exclusion throughout and across time. On this slide, this is a quote from Lee Atwater, who was an official in the Reagan administration. He, is really credited with outlining this deliberate strategy that our nation undertook to restructure our tax system, and not just along this idea to align our tax system with businesses, which is the way we typically think about it, or align it with class interests, but to align our economy and our tax system against the interests of African Americans. I'm going to read this slide so you probably already read it. I'm going to read it so you kind of understand the weight of these words. This is Lee Atwater speaking. By 1968, you can't say the N-word. That hurts you. But you can say stuff like forced busing, states' rights, and other stuff. You're getting so abstract now that you're talking about cutting taxes and all these things. You're talking about the things you're talking about are totally economic things, and a byproduct of this is that Blacks get hurt worse than whites. Now, think about that for a moment. That's very pernicious. That's very, in many respects, you can use the word evil from the standpoint of the intent of that policy or that strategy. Now, of course, people tend to apply this to ideas around racial gerrymandering, ideas around how the South switched from Democratic control to Republican control, and all those things are true, but it has serious implications for our tax code and our economy. Now, on the next few slides, we're going to kind of capture some of how that played out in a very straightforward way across time. And so I'm going to go through these slides very quickly. This slide is designed to capture or shows you the total federal, state, and local tax rate applied to different income quintiles, 0 to the 10th, 20th to the 30th, 40th, and so on and so forth, all the way to the upper income distribution. So if you see early on in the 1950s, the top tier income bracket was paying a very high tax rate, and the tax rate for lower income individuals was relatively low or relatively even. And we see this huge uptick from standpoint of the rates during that time period. And it's like I said, combining federal, state, and local tax rate. Over time, you see that shift downward from 1950s on across to the present day. That total tax rate has drastically decreased from standpoint of the amount that the wealthy individuals are paying, but the tax rate that low-income individuals are paying has remained relatively the same. And so this slide really kind of captures all that information together, so you can see how that is played out across time. Now, one of the big takeaways is that to think about that time period, 1950 to 2018, and look at the jumps between 1950 and 1970, 1970 and 1990, and think about what was going on during our country in that time period. And this time period, from standpoint of this shift, really occurred during the most tumultuous time in our country with respect to race, with respect to civil rights, with respect to all of these issues around shifting and thinking about how our society was going to be aligned and who the society was going to benefit. And so in many respects, it's no accident that our tax system shifted during that time of tremendous racial upheaval. And we'll go before we go to that slide. And so as we think about this, what I want you to also think about is that, and so those slides came from the a book that you may want to pick up called The Triumph of Injustice by two economists, Emmanuel Saez and Gabriel Zuckman. They lay out in very clear terms some really thought-provoking data around how our system has shifted. Their focus is really more on class, but for my purposes, you can't really do this type of analysis or read that book and not think about the racial implications of how that has played out over time. And looking at that, I mean, also think about from the standpoint of how we typically think about this shift. Once again, as I said earlier, we typically think about this occurring under the guise of, creating benefits for job creators. We think about this from the standpoint of this shift in neoliberal economics. We think about this as, in terms of third way politics. We think about this from standpoint of a rising tides lifts all boats and all these different things, even trickle down economics. And think about the idea that none of that, absolutely none of that, is germane to one political party or exclusive to one political party. When we think about Atwater and being the architect of this Republican strategy, it's not just a Republican thing. Think about this from standpoint of all of these policies occurred regardless of whether it was a Republican or Democratic administration in place. And even Obama was fond of embracing the idea that, rising tides lifts all boats. And the reality is that your boat can't be lifted if you have a hole in your boat. And so this idea that if we just provide tax benefits for job creators, that those benefits are going to accrue to everyone is belied by the reality of increasing income inequality and the really entrenchment of poverty in so many communities across our country. These next two slides kind of just focus on another example of the tax code and how it's aligned against low-income people and people of color in particular. When we look at tax expenditures and the tax expenditures that are designed to assist low-income people versus the tax expenditures that are designed to assist middle and high, particularly high-income earners. And so we look at the tax expenditures that primarily benefit low to moderate income taxpayers. You can see the total there down in the bottom right-hand side. If you total all those up, compared to the tax expenditures that are paid to wealthy taxpayers, and it's really no comparison. And if we were to add the 20% deduction for qualified business income, the number would be even higher. I didn't add that one in because that one, goes also to like individuals who are, for example, accountants or whatever have you, who may not be in the upper income strata, but it does disproportionately benefit individuals in the upper income strata. And so we see once again, even through tax expenditures, how the tax system is aligned against the interests of low-income individuals in America. And so arguably we could probably stop there, but I would be remiss if we didn't look at all these tax policies and the surrounding policy context in America. The deliberate restructuring of the tax code that we kind of just looked at, it occurred alongside and on top of a range of policies and policy decisions that had already placed people of color, and in particular African Americans, in a disadvantaged position. We look at Social Security, for example, from 1935 to 1954, domestic workers and farm workers were not covered by Social Security. approximately what 65% of African American workers were engaged in those types of work, as farm workers or domestic workers. And the argument was that they did that because it was difficult to get information on how much those people were earning, and so it was default and wasn't intentional. Regardless of whether intentional or not, it disproportionately impacted people of color because they didn't have that cushion once they retired to draw down on those funds to keep them out of poverty. Similarly, looking at the Homestead Act. The government has granted over $270 million acres rather in its history, through different versions of the Homestead Act. Which basically was you lit out on your horse or your wagon out to Nebraska, Oklahoma, whatever have you, and just stake your claim. That land was yours for free, pay a recording fee, and you could have these massive acreage and farms, and individual farms by virtue of being able to go out there and stake their claim. The reality is that African Americans were not able to take advantage of that opportunity, which is essentially a massive transfer of wealth from the federal government to white citizens during that time period. And suffice to say that there's, whether you're talking about Social Security Act, Homestead Act, or any of these, there's a clear synergy between those public policies and tax policy in particular. For example, with the Homestead Act, that land and that wealth has been passed down from generation to generation in our history. And the tax code has supported and continues to support that massive transfer of wealth. And so in addition to the federal benefits of that, from the standpoint of transferring that wealth, in the past 30 years or so, we've seen nearly every state basically repeal their wealth taxes. And so we see this compounding of the effect of wealth transfer at the state and local level. When we look at the GI Bill, for example, because of redlining, African-American soldiers who returned home from war could not obtain mortgages in the Black neighborhoods that they lived in, meaning for many of them, the benefits that they had earned through their service, they just could not access the wealth generation benefits of home ownership, and from when turning to taxes, the compounded benefit of the mortgage interest deduction. And so the example of the GI Bill is particularly, I think, instructive from the standpoint that it captures the intersection of not just federal policy, but federal policy, state policy, and local policy. Home ownership and the mortgage interest deduction are, of course, linked to state and local property taxes. You pay property taxes on property that you own, which then allows you to deduct that interest on your taxes, as well as deduct the state and local taxes, what they call SALT deduction, on your federal income taxes, which in turn, those property taxes and amounts are linked to city zoning decisions, linked to decisions around investment decisions from standpoint of where cities invest in parks, where cities invest in other infrastructure, roads, highways, where they draw boundaries, and from the standpoint of where the city boundaries are, where they carve out boundaries for school zones, all of which dictates how much your property is worth, which dictates your property taxes, and so on and so forth. The result is the existence of this circular and cumulative causal factors that hamper the mobility of African Americans in America. All of this, like I said, is inextricably linked, and you can't tease one apart from the other. So the major takeaway being that there's an interaction between the federal tax code, federal, state, and local policy to hamper not just wealth generating benefits, but the mobility of one group, in particular people of color, to the exclusion of others. Now, this last slide is like a slide for me. I love slides like this because they capture a lot of information in one easy to understand image. With this slide, the idea is to correct a flaw in our thinking. We tend to think about this as an individual story. And yes, it's an individual story about individual income, about family wealth and family mobility. But that's only part of it. A bigger takeaway is the impact and the legacy of this discrimination on your tax dollars, whether you live in Nebraska, Washington, Maine, or whatever have you. Basically, this slide captures the givers from the takers. When we look at those states that on balance pay more in federal taxes than they receive, you're talking about the New Yorks and Massachusetts and so forth. And so those states that are in the red and pinkish colors pay more in federal taxes than they receive in taxes. And those states in the green are those states that receive more in federal monies than they pay out in federal monies. Now, for me, most of my attention, particularly these days, is focused on the American South and the social and economic policy history of that era. But it's not just a Southern issue. And so the Southern states, as you see from the standpoint of the darker green shading are states that take in more in federal dollars than they spend out. But it's also a question about the Midwest. When you look at places like Kansas, when you look at places like Oregon and so forth, and many of these states have been been enacting some of the same types of policies, but in a different and more nuanced way to ensure that their state tax base remains low and continue drawing down tremendous money from the federal government. But when we look at the South as a text case, we can go back to the Reconstruction era and see how those states set out on a mission to impoverish Black citizens, Black communities. They carved out enclaves of separate communities, separate and apart, separating Black residents and white residents, and creating exclusionary educational systems to keep taxes from supporting the common good. So essentially what we had in those states was creating a pattern of lowering property taxes in those states, because when you go back to that time period, early 1900s, the property tax was still the major form of revenue for states and local communities. And they shifted from that to the sales tax under the justification that Blacks were not paying their fair share, that idle, quote unquote, idle Negroes were not paying their fair share into the state tax coffers. And we see the governor of Mississippi in particular, he used that very language and very justification to pass the nation's first modern sales tax during that time period. And the thrust of all these actions was to keep taxes low for white residents, and so that they didn't have to, contribute to the common good, generally speaking, but to address and redress the wrongs that were enacted against people of color in the South. And for decades thereafter, we see Southern leaders have funneled monies to Southern states in the form of investments in military bases, defense contracts, other projects, and you add to that the maintenance of low-wage economies in the South and the support of the low-wage economies through the over-dependence on transfers from a standpoint of TANF, SNAP benefits, and so forth. You have entire region that is dependent upon federal monies in the form of tax subsidies, benefit payments to the social safety net, and so forth, just to maintain themselves, as opposed to creating a more balanced system of taxation so they can really, in many respects, pay their fair share in the overall economy. For once again, that impacts everyone. And in particular, states like New York and Illinois and Massachusetts are particularly rankled by this disparity that we have across the country. And so, like I said, in summary, the major takeaways that the federal, state, and local tax systems have interacted and continue to interact to maintain impoverishment, limit mobility, and limit access, and it's particularly pernicious in the American South. And as much as we try to tear the two apart, class and race are linked together, but it is very clear that race has played its own role in influencing tax policy in America. And last point is that you can't analyze this from a standpoint of looking strictly at the numbers. We have to do this broader analysis, looking at institutional processes, cultural practices, and so forth, if we are to really understand, how tax code has been implemented and used to the detriment of one group of individuals in America and to the benefit of others. And that includes my presentation. I'll turn it over to my colleagues.
Okay, thank you, Donnie. I think right now we're going to break for another poll. So take some time to answer this question.
Francine, I think you might be sharing the wrong screen.
Our fifth poll just launched, so take a moment to answer that question too. Okay, so at this time, I'm going to turn the mic over to our final speaker, who is Francine Lipman. She is the William S. Boyd Professor of Law at the University of Nevada, William S. Boyd School of Law. She's also a CPA and one of 8 individuals serving on the Nevada Tax Commission, which supervises the overall administration and operations of the Nevada Department of Taxation. Please welcome Francine.
Thank you. And I'm sure the other audience members are feeling like I am listening to Stephen Dean and Donnie Charleston, just kind of shaking your head and almost needing to take a breath of fresh air. So I'm going to give you a breath of fresh air. And when we think about Black History Month, I think about, for some reason, especially now at this moment in time, and this place on earth, poetry. And as I hope all of you heard the amazing Amanda Gorman at the inauguration reciting her poetry, The Hill We Climb. And you might not realize, but she spoke deeply and in my mind on point about institutional racism, including in our tax system. She said, and the norms and notions of what just isn't always just is. And that has really been resonating with me for days since I read and heard her poetry. What is also so amazing is she is only 22. And of course, Maya Angelou was the first woman poet at an inauguration, and that was 1993, 28 years ago, before Amanda was even born. But what she says in her own poetry, Amanda has said, if you can't see it, how can you be it? Before we go on, I also want to talk about another legend who we lost last year, Congressman John Lewis. All of you, of course, know about what an advocate he is for voting rights, but you might not know he also was a huge advocate for tax justice. He served our country for more than 34 years. He was reelected 16 times, and only once did he receive less than 70% of the vote. He clearly understood how critical voting rights were, but he also served on the House Ways and Means Committee as a senior member. He chaired the subcommittee on oversight, and he also served on the Joint Committee on Taxation. And what he said about our tax code, I work hard to ensure that our tax code is fair and equitable. Too many people seem prepared to shift the burden of taxes and government onto hardworking American families and small businesses. Like the annual budget, the tax code is a statement of our values. I believe that our tax code should reflect our values. Our tax code should reflect the American values of fairness and opportunity. It should express not only our priorities for today, but also our priorities for the future. As Donnie Charleston has so brilliantly pointed out before my presentation, our tax code is replete with racism. And you might think, well, it's America. America's great. Well, guess what? It really is not in many, many ways. If you look at inequality, America is the worst among developed countries. This is measuring the Gini coefficient. And by the way, one thing that breaks my heart is that all of the statistics that Donnie presented and that I'm presenting are before COVID-19. And one thing we know from the Great Recession and other recessions, after recessions, people of color do not bounce back. And what happens is inequality is exacerbated, and certainly by this disaster that we've seen, that we're experiencing now. Median Black and brown families' wealth pales by comparison to white families. Again, these are somewhat dated numbers because of post-COVID-19, it's been exacerbated. I do want to talk about some very critical information, and that is that Derek Hamilton and Sandy Darity, two brilliant economists, have demonstrated again and again, they've stratified data and they've demonstrated that the old shibboleths about how we can mitigate inequality and poverty, that if people get married, if they get a job, if they enhance their education, really trying to justify the racist trope that it's lazy individuals who are poor. Well, Wall Street is hitting record highs, and we know that there's unemployment and underemployment right now, which is critical in our communities of color. Trickle-down economics has not worked. There's some great pieces of scholarship out there very recently that have demonstrated that the Reaganomics have not worked. It's resulted in record inequality. But what Derek Hamilton has demonstrated is at every level of education, including PhD, MD, JD, white households are significantly more wealthy than Black households, including marriage. If we look at married households versus unmarried households, we can see that a single white households with a single parent have more than 2 times the net worth of 2-parent Black households. Similarly, a fully employed Black household has less wealth than an unemployed white household. And one statistic that just resonates with me, a college-educated Black individual has on average less wealth than a white individual without a high school degree. And you might say, I hear from many people on the street that the US is overtaxed, and that is simply not true. United States on this chart is well below all the OECD countries and very low on the chart for taxation. We are not a high taxed country. And if you look at inequality, the US ranks decently compared to other countries before taxation, but after taxation, because we don't redistribute our tax system, we rank very high on being unequal. And you might think again that we have high marginal tax rates. That's simply not true by any stretch of the imagination. And indeed, during World War II, President Roosevelt asked Congress to impose 100% rate. Congress didn't. They came back with an 88% and then a 94% rate. But to get to an issue that I think is critical, and I just have a few minutes, so I'm going to push through rather quickly. Congress has been defunding the IRS for year after year to the extent that they have cut back significantly on their audits. The audit rate for largest corporations has dropped over 50%. Millionaires over 60%, but that is not true with respect to lower individuals. Lower individuals have seen a reduction in the audit rate, but not at the same level as high income individuals. And indeed, if you are an earned income tax credit individual, you have the same chance of being audited as the highest 1%. And as Donnie so dramatically pointed out, the tax gap is not with low income earned income tax credit recipients. In fact, the top 10% contributes as much as 70% of the tax gap. And that is generally because pass-through income and pass-through employment taxes, not because of tax credits. There's a lot of mis and disinformation out there that the earned income tax credit has really generated fraud and contributed to the tax gap. When we look at 2018 audit data, 43% of all audited returns include an earned income tax credit. That is necessarily a low income taxpayer. 37% of all individuals are audited because of the earned income tax credit. And why? 99% of those audits are correspondence. They're cheap. Moreover, they are pre-refund audits. So what happens is it's not the audit where the individual has the money in their pocket and the government is trying to get it back. No, these are predominantly pre-refund audits. So what's happening? Why are EITC individuals, why is there overpayment in that area? Well, frankly, it's because they're over audited, and this is a group of individuals who are disproportionately do not have access to tax justice. Indeed, 69 to 75% of all EITC individuals who are audited either never received the notice, never responded, or stopped responding. And for any of you who have tried to respond to the IRS, especially during the COVID times, it is dramatically difficult to get in touch with them. And these individuals who are receiving these letters, again, are more likely to have moved and definitely less likely to have access to tax justice. And these audits are pre-refund audits and they're lengthy, so they're not getting their audit dollars, their EITC audit refunds. Now, this chart is critical because this is a chart of the magnitude, the audit intensity. And you can see this is a similar, I also study poverty. This is the Black Southern Poverty Belt. It's also the brown border towns that are disproportionately audited. And when we look at the wealthy Northeast, we see they are under audited. And indeed, when we do a deep dive into these 10 audited counties, we see 8 of them are in Mississippi. They are disproportionately Black, they are disproportionately poor, and they are disproportionately counties that do not have lawyers. 2 are in Louisiana and or Alabama, but our United States is about 13% Black. And so that these counties are over 80% or average 80% demonstrates that this is disparate impact on Black taxpayers. When we look at the counties that are not audited, they are disproportionately white and disproportionately do not suffer from poverty and have access to lawyers much more significantly than the other counties that are suffering this tax injustice. What can we do? Well, there's a lot of things we can do. And since I've basically run out of time, I'm going to ask you to look at Nina Olson and Les book, and other brilliant scholars have put together a wonderful work report to Congress on the earned income tax credit, and they have a lot of suggestions on how to fix this. So what can you do? What you can do is be an anti-racist tax professional, because as Amanda Gorman told us so brilliantly, there is always light, if only we're brave enough to see it. But most dramatically, if only we're brave enough to be it. Be it. Thank you.
And thank you, Francine, and thank you, everyone, for joining us for this program. I want to thank all of our panelists for your thoughtful insights and the value you've added to all of our days. Everyone is doing just critical work. Thank you to the section of Civil Rights and Social Justice for sponsoring us. I urge each of you to consider checking out their website. They have a lot more free programs that they're offering. At this point, have a good day.
Thank you, Richard. Thank you, co-panelists.